questions go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing the firepower that your financial life may have been missing. And whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now today we have a thunderous lineup as usual of segments to give you all as much information as quickly as possible. As per usual, we're going to do some live trading, some market analysis from about now to around 10 o'clock. Then we have a favorite, Adam's Asset Assault, which basically I give you 10 names in under 20 minutes, quick rapid fire analysis, mostly TA analysis. So you get 10 names, levels to watch, the whole kit and caboodle in about 2-minute clips of each name. So if you like to trade on your own, you want some ideas, you want to stick around for that, that'll be around 10 o'clock. And lastly, we have options operations. So I field questions from you guys, or I have one or two that were submitted. Typically questions about like more specific about how to manage certain positions, what to do in certain scenarios. That will be after Adam's Asset Assault, roughly around 10:20. So we have a very interesting morning. Let's pull up the charts and take a peek at what's going on here. And yeah, so this morning Trump decides to mutter something about tariffs, and as you can see, we went yesterday on the show. Well, actually, let's take two steps. One, we was mentioning something about tariffs, but two, yesterday, if you watched yesterday's show, I mentioned how Apple was looking really weak intraday as well on the daily chart. And as it happens to be, Trump actually sent out a tweet this morning aimed at Apple, essentially, not looking too good there. And now they're down about 3, almost 4% in the pre-market trading at 193.85, below my LOI here at 195.83. So that does put this lower LOI, 187.52, if things get bloody today, in play potentially. So keep an eye on that level for some more potential downside on Apple. We'll talk about that a bit later. But I just wanted to highlight that because we did see, and we did talk about pretty extensively yesterday, how the rest of the market was actually looking pretty good. Google was looking okay, Microsoft was looking okay, Amazon was looking okay, Tesla was looking okay. But for some reason, Apple was just not getting out of the block there. I was looking bearish on the daily chart, and now getting this news is not helping. So Apple's definitely looking a little bit more bearish than it should be on the daily. I mean, overall, it's not looking very good near term. I believe I have the setup for Adam's Asset Assault. I do, so we'll talk about the technicals later. But I would definitely keep an eye on Apple going into today and into the weekend. Now, as a reminder, Monday, the market is going to be closed in observance for Memorial Day. So as a result, expect a very, very low volume day today. What does that mean for you? I will tell you. When volume is lower in the market, there are fewer market participants. So when there's fewer market participants, it doesn't necessarily doesn't mean things are more bullish, more bearish, more anything. It just means it takes less money to move price, right? So let's say you had $1 million and you wanted to buy shares of SPY, whatever, right? And let's say you purchase SPY on a normal day when there's normal volume in the market. And maybe, again, for simplicity, let's say that $1 million moves the price 10 cents, just right, or a dollar. We'll use simple numbers, a dollar. So you buy 1 million shares, it bumps the price of SPY by $1 on a normal day. For people on the bid and the ask side, there's fewer sell orders, there's fewer buy orders. If I place, or anyone place that same 1 million buy order, again in this example using SPY, today, in theory if there's lower volume, then those orders get swept much more quickly, because there's fewer people participating in trading today. Consequently, that $1 million buy order, instead of moving the normal $1 point that it would, maybe it moves 2 or 3 today. And again, this is just arbitrary numbers to give you an idea. So there's 2 things to look out for today. On lower volume days, it doesn't necessarily mean the market will be choppy. It can mean the market will be choppy because, again, there are fewer market participants, but it also can mean price can get bullied around, as I just gave you an example. So as a day trader, if you're someone who day trades, you do want to take that into your risk analysis. You also want to be aware, if you're someone who trades maybe next week's contracts, or if you have any swing positions open, depending on your expiration, you have an extra day of theta decay in there. So you have an extra day where your contracts, if you're buy to open contracts, will lose value. Because there's no market's not open on Monday. Now, with this, you may be able to have some other opportunities. Since there's an extra day of theta decay, you could potentially find other opportunities in selling contracts via credit spread, cash secured puts, whatever, covered calls, whatever you want. There could be extra opportunity there, but the market's not dumb. It obviously knows that the market is going to be closed on Monday, so you may be able to get that little bit of extra theta decay in there, but just make sure it lines up with your technicals and what you're doing. So that's the big warning about today before going into today. For a lot of you, I know you are day traders, but more than likely, unless we have more drama, it will be something like this. At least that's what I'm anticipating. Crickets. Not looking for too much to go on today. We did have this like gap down again on some tariff drama, which does change things. We saw bonds kind of allude to this kind of happening. And if you watched the show yesterday, I mentioned how on the daily chart on SPY, we were looking pretty toppy. And I also told you guys all week, with the exception of 2 positions, I've been taking bear side trades all week. I was only trading bear side. And then I ended up taking a call position, which did work out. I took some calls that I swung. And then I also took a call debit spread that worked out. Both were like 15% and like 25, 30, whatever it was. Nothing fantastical by any means, but seeing yesterday and how we were moving, I actually realized a lot of my positions and closed out because this daily chart was looking not fantastic. Now, what you want to look for today, right now we're at 174.40. This key LOI, and we talked about this on the program yesterday, we're near the gap and we're near this LOI. And I warned that this area could be what I called bear bait, where people obviously see the gap down, right? Because we gapped up on whatever date this is, 5/12. And let me hide my lines here so we can see a little. Oh, look how much clearer that looks. But we had this nice gap up here. And now bears are looking at this gap down going like, oh, that's a cool gap. I want to fill that gap. And it could, by all means. But prior to the tariffs and the tariff drama and prior to the bonds going up, I was speculating that general area was going to be, as I like to say, bear bait, because that gap, or just before that gap, we do have one of my LOIs here at 176.70. So that's a key technical level. The low, or the start of that gap, is 177.04. So that range, you would technically enter the gap sub 177.04, but you're above that LOI, which is a perfect scenario where I would like to consider a long with a tight stop, because people are going to get suckered into trying to play the gap down, and get reversed to the upside essentially. But in this scenario, we have gapped under that level, and we're actually now sitting kind of in between the gap in the middle here. Now you do have the 200 MA on the daily here, which more than likely will get tapped today. That number today is at 572.92. So getting some more downside or getting a grind down for 2 or 3 more points wouldn't shock me. And obviously there's this obvious gap fill, which if on a low volume day people are going to be selling, it is possible. I would not be bullish today as a whole. I would be personally, and you'll see me, I probably won't trade too aggressively, or at least day trade. I'd be very risk off today. As I alluded to, the additional risk of it being a holiday weekend. The risk parameter you want to watch for in terms of volume, because that's what I was alluding to before. My general rule of thumb is when you're looking at the 1 minute candles or the 5 minute candles, you want 100K volume per 1 minute or 500K volume per 5 minute. That kind of gives you good, I mean, you could flux a little bit, 400K and maybe 80K. So you can offer a little bit of flux there, but when you have that much volume, you know that there's enough people trading so you can get in and out of your trades, obviously, which is the most important thing. You can't sell if there's no one to buy, right? So you want to keep an eye on that. If you see those numbers dip, which you'll see if we see that, and I'll talk about it live here. If we see hedge funds go on vacation early, right? Big money just not trade. You'll notice that volume dip anywhere from like 9:45 to 10. Normally, if you don't see it dip by 10, it'll be like a normal day in terms of volume. But if you start seeing that volume drop off early, that is a massive risk off sign. I'm not saying things are bearish. I'm not saying things are bullish. It means you don't want to trade because of that extra risk that you could get bullied around. Now, you could trade if you want, but if you do decide to, then maybe be mindful of lowering your risk. So normally if you trade with $100 a trade, maybe you do 50 or 25, like much lower, where you could still make a little bit of money, of course, but you lower the odds of you having a bigger loss because you're getting pushed out of a position. Now, keep in mind, with a smaller amount of money, if you're expecting a larger move, so if there's low volume and it works in your favor, that smaller amount of money can make you a lot of money, right? If your normal size is 100 and you trade for 20%, you'd walk away with 120 bucks. Maybe you trade with 50, and because if it works in your favor and it works dramatically the other way and it goes up 50%, then you're making $25. So you're roughly the same amount of gain there, but you lower the amount of money you're putting on the table in terms of risk. So these are the kind of things you want to consider on days like today. Now, also Russell, when we talked about NASDAQ yesterday, the Qs, both are actually down more than SPY, and you're seeing the Qs, and we're seeing a little bit of bump up here right into the open. But we're seeing the Qs and IWM down. We also took a peek at our sectors yesterday, and we noticed how consumer staples were up. And look at the only 2 green sectors at open here: consumer staples and utilities. And remember how we talked about how utilities were weirdly not lining up with staples, but when you notice how staples and utilities line up, that's more defensive positioning. We're already seeing that in the pre-market with utilities up 0.81 in consumer staples up marginally, but still it's the only things that aren't red. So when you start to see money shift towards utilities and shift towards staples, again, depending on your time frame, that is showing that the market is looking to be more defensive than offensive, especially when you correlate that with tech, which is your growth rate, being down 1.8%, which is a huge drop for the sector on the day. Looking at other sectors here, industrials down, having a bad day. Materials and real estate down marginally. I mean, half as much as tech and industrial, so not as bad. Healthcare, typically healthcare does pretty good on a Friday. Down at the open here, but not horribly. XLF also typically does pretty good on a Friday, but down 1.3%. So unfortunate here. Into the open, but here we go. Market just opened 9:30 on the dot, and we're rolling right now. Let's take a peek at the market. We're just going to watch the market at this moment, kind of monitor as we go, see what happens. Let's see if we tap my LOI and reject here. And again, the key thing we want to watch for today specifically is volume. So we want to see how volume comes in the first like 15 minutes or so to kind of get an idea if it can be a risk on day, meaning like a normal day, or it's risk off in terms of lower market participation. VIX opening up 25.22, not great if you are bull. Volatility, big pop. We blew through all of my levels here, so you can see on my chart here, this daily chart. Blew through all 3 of these, like I guess you call them resistance levels on VIX, and now I could probably put one here, 25.63. Keep an eye on that. Right, that's the high there. And 25.62. Keep an eye on that for VIX today. That will be an area you want to keep your eye on to see if we get any sort of rejection there. SPY coming up to that LOI here. If you're a scalper, you could take a short here and risk a little bit above that. I'm not going to take that trade because of the day. I'm just saying what you could do if you liked. Apple back up to this 195.83 area as well. So you might see some correlation here with an Apple rejection and a SPY rejection because they're lining up pretty simultaneously. If Apple rejects here, you're probably going to see the market reject here at the same exact time. Google down in the open. Amazon on another key level here. Remember how I said yesterday that 211 was a pretty important level? Well, we're under that right now, tapping this 198.85 key technical level. Tesla selling hard into the open here, down 2%. It's got room to fall here too if it breaks under 331.89, so be careful if you're long Tesla here and if that level does crack. SPY wicked above that LOI by about 16 cents. POC now, which is the point of control where the most volume on the day has been traded thus far, looking at what we're looking at here. 576.23. So high probability of a rejection here if we get under that. Apple is sitting right on my magical blue line here. My LOI, level of interest. We're trying to push up. VIX is rejected that 25.62 area. That open price was 2014, moved up to 25.53. Rejecting that now. So the market may try to push out of the block here. You need Apple over that area, which it's having a hard time for SPY to get over this. It's that easy. It's that correlated. Microsoft actually not down atrociously comparatively, at least in terms of price action. Nice little bounce here on Tesla. It's going to help the market. Google coming up to around its 200 MA on the 1 minute. You're going to want to keep an eye on that. Are we already dropping on volume? We're okay. 400 in 1 minute. I mean, we're at the open, so volume should be very high here. We'll see how this pans out. VIX 23.93. Okay, it's looking like the market's going to try to push for the upside here. It's going to try. Nice little push here on Amazon, going for that 211 spot. Tight eye on that if you're going to be trading Amazon today. All right, look, Apple broke it. It does have the 200 MA here, so we are coming up to an area of resistance. If it can break through here, then the market could try to push to the upside, which is what I'm sure a lot of us would prefer to see. I just wouldn't be buying this just yet. So if we want to make things super simple, I mean, in general, I'm not going to be too overzealous. I would be bearish on the day. I'm not saying I'm shorting at the open or anything. I wouldn't be bullish unless the market recovered like 4 points, honestly, on the day, the whole day, which it could happen. Don't get me wrong. We gap down. You could fill the gap to the upside. Getting back to this range that we saw yesterday, we just hugged in this range, that 581 to 583 area. We kind of just hung around in that range yesterday, so getting back in there and getting comfy again would kind of eliminate the downside risk. I just don't see it as happening, unfortunately. But if I'm not putting my money where my mouth is, it's because I'm not going to take the risk. IWM, nice push here right out the gate. So small caps are trying to eliminate this move. The VIX might try to catch a bounce here at around 2309. So you're getting close to a potential VIX support area while SPY is moving up here. Amazon at key resistance, 211. That number exactly is what you want to watch. Let me just make sure we have no news coming out. I think we had news at 10 o'clock today. But outside of that, not much. Ooh, Fed speakers. I missed that. So U.S. Treasury, no, he's done speaking. You got Fed speakers. I hate saying these guys' names. Musalem and Schmid. God, love Schmid. Great guy. Schmid. They're apparently speaking at 9:35. So like right now, that was not on my docket earlier today, so that must have just got added. Okay, more things that were not on my docket when I checked this morning. U.S. Treasury Secretary speaking at 11:30. You have Fed Cook speaking at noon, and then Trump is going to be signing executive orders at 1 o'clock, so expect the unexpected. Him to say something about something somewhere happening with something, money, America's great, taxes, whatever, who cares. Probably impact your trading, so watch 1 o'clock very closely. So we're going to keep a tight eye on this for a little bit. If you have any questions in the chat, feel free. If there's any names you want me to take a peek at the open here, feel free to drop them in the chat. Primarily on the YouTube chat, so if you're watching on X, I did set it up so I should be able to see what you're saying on X. So if you do want to drop a comment on there, if you're watching on X right now, feel free. I got my chat open here, so if there's any names you want to take a peek at together into the open here, let me know, and we will take a look together while we're watching the market and seeing what could happen here. And don't forget to stick around. In about 20 minutes or so, we're going to be doing Adam's Asset Assault. So that's me firing through 10 names within 20 minutes. You're going to get all levels, upside, downside, bear trades, bull trades, the whole kit and caboodle. That will be in about 20 minutes. And then we also have options operation. So you guys ask questions, or if there's any submitted questions in regards to how to trade or how to handle certain positions, we're going to be talking about that. More of like a risk management kind of segment. That'll be right after Adam's Asset Assault, roughly at around 10:20. SPY coming up to the 200 MA here. Volume is still pretty okay. We're still pretty good volume for the open here. Like I said, you want to be over 100K volume. We're easily clearing that still. Granted, we're only 7 minutes into the open, so we should be very high volume here. But you're looking like you might get a rejection here just shy of the 200 MA on both the Qs and SPY. So that's pretty correlated there. While IWM is also hugging that same area as well. Did VIX tap there? Let's take a peek. VIX is coming close to that support too. Didn't get there yet, but keep an eye there. So there's a good probability of getting at least a short-term rejection here with volatility pushing up. You also want to be aware that your VVIX is actually up 6%. So your VVIX is your volatility of volatility. This measures how volatile the VIX is. So when your VVIX moves up and VIX moves up, it can mean that there can be mean reversions on the VIX, meaning you could have a flip in the VIX, meaning it goes up more aggressively or down more aggressively because you're tracking how volatile the actual VIX is itself. So volatility is more volatile today than it was yesterday, and volatility is also up. So you could have the VIX get pushed around a bit as well today. So it is a more risk-off kind of day just from a volatility standpoint. And then, like I said, you have the holiday thrown in there as well. Not a great day to day trade, at least by my summation, if you're looking to buy to open options, especially on top of that, it's Friday. And you don't want to lose your shirt on a Friday. So be mindful of that if you are a zero-day options trader, to be conscientious of those additional risk factors today that are unlike normal Fridays. You have more risk today than on normal Friday. All right, SPY rejecting here for now, as I previously alluded to. The POC, or the point of control, is now moved up to 577.53. It wouldn't shock me to see us break new low a day if we get under this 576.70. So watch that level very closely. Again, I'm not bullish until we get north of 581 today, essentially. It is not going to be it would not be a bull or a bear, really. It's just a no trade kind of day, or at least a no trade kind of open. You're in the middle of a gap, so on the daily chart we know this isn't anything shocking here, but you're in the middle of a gap both ways. You've got daily support beneath where our current price action. You've got daily resistance above us, so it's not advantageous either which way. And then you throw in potential volume grind off in the day. It does not make an advantageous trading scenario if you are someone who is looking to buy to open options today. And I'm going to keep saying the same thing over and over and over because it's important, because I know on a Friday some people just like lose their minds and decide to throw all their money into one options trade and think they could become millionaires, and you could, but it's probably a really bad idea, so don't do it. So I'm really trying to push the risk home today that if you are going to take a trade, take a much smaller trade than you normally would today, just to protect yourself a little bit. Yeah, there's a very strong possibility if we crack, if bulls cannot protect this 576.70, that we actually sell off to the downside. I'm pretty confident in that. We're not under it right now, and bulls have pushed up above it, but if we do break this, you will see a new low a day. You will break pre-market lows, in my opinion. Let me put it like this. On a normal day, I would take that short on the break of that. I'm not going to today, but on a normal day, I would. Just from a looking at the candles technical standpoint. That is what I would do on a normal day. Today, I am fine with sitting and watching. Volume's still pretty good here. It's 941. So you want to keep an eye on the time and the volume by time as we go on today. Let's see if those Fed speakers are saying anything good, bad, or indifferent. Am I crazy? They just removed it. No, it's there again. Okay. And don't forget you have new home sales at 10, which is going to be very interesting for me. If any of you are exposed to like builders or anything like that, keep an eye on that. With mortgage rates basically the highest they've been in however long, you're going to want to keep an eye on if homes are selling. They're not doing great, so if that number keeps going down, that could affect how the Fed reacts going forward. Right? Moves, reacts. Yeah. So you want to be very conscientious of that at 10 o'clock, and on a day like today, definitely will influence the market. I'm going to say with 80% certainty we make a new low a day at this point in time. For what it's worth. If this level cracks, with a high degree of certainty, we make a new low a day on SPY. If they defend it here, could push to the upside. It won't be easy, but they could. Apple's struggling here, hugging the 200 MA. Hard rejection on Microsoft. Google just kind of farting around. Amazon staying north of that 211. That's a really, really important level. That's near the Jeff Bezos level of him selling consistently. So you're going to want to keep an eye on that level, specifically on Amazon. Tesla's actually holding up pretty good, all things considered, after that sell-off and coming back to the upside. So not out of the woods by any means, but not the worst either. But I would still hang my hat on an 80% certainty that we break to the downside here and make a new low a day. Let's see if I'm right. We will see. We will see. VIX currently sitting 2363, curling back up. Watch that. VVIX is heading back up. So now, additional risk factor here. If you see the VIX climb and you see VVIX sell off, then it is definitely like super risk off, because that's telling you volatility is increasing and how volatile volatility is going down. So it's more assured that volatility will continue to increase. All right, we're under that right now, but you got to look for some follow through here. Yeah, it's not looking good for bulls. They would have to step in like now. Now-ish. Your third scenario would be just to basically stay in like a $1 range here. If we keep building up volume above this 576.70, you could get pinned here. Depending on volume is, which right now, again, we're keeping a tight eye on our volume on our 1 minute here, and we're still clean over 100K. It's still pretty solid open, which is good if you're a day trader. 5 minute volume is really good, actually. 2 million, 2 million, and 3 million. So pretty solid 5 minute volume. People are trading. Money is moving. Let's see. I'm getting no alerts on Muslim and Schmid. So I guess they're either A, not talking, or B, not saying anything that matters that would come up in my feed here. Yeah, not looking like anything right now. Man, this is like watching paint dry today, unfortunately. It's hard to make this too exciting or interesting when we're just kind of not doing anything here. Q's coming down. IWM ironically holding the high. So you're actually seeing, if this continues, divergence between your small cap and your tech, which is fascinating because that would be indicative of money rotating out of your tech and into your small cap, which would be more risk on behavior than risk off, which would be very interesting to see if true. That's looking like a pretty solid break here. Low a day on the SPY, 575.60. We're about 70 cents off. Let's see if my prediction will come true. The crystal ball, if it lies or not. VIX still curling up here. VVIX curling up as well. So there is a probability that volatility will move down since the VVIX is also curling up as volatility curls up. So there is a possibility of volatility reversals. Your UVXY is going up. Apple back under that LOI. That's not good if you're a bull. Microsoft near the lows. Google new low a day. Not great there. Amazon's right on that level. It's so important for them to hold that. Tesla, it is a very that would be the emotion attributed to today kind of day. Unless you got in on an option, read it open, you wrote it, and you got out. Like, this is not going to be a fun day to trade at all. Volume starting to taper here a little bit. It's pretty consistent still, but starting to taper off, which we're still in the realm of logical, meaning volume obviously tapers as the day goes on, especially when you head into the midday. That's why I said you'll notice a steep volume drop off around between now and 10. So if we see volume like really get low, and we're saying again under 100K per 1 minute is typically my barometer for risk, then that will tell me that we're in a very low volume environment. Currently at 576.28, just a few shekels shy of a low a day here on the SPY. Bulls are trying to step in here. Market might be waiting for that house data at 10. That's going to be a pretty decent catalyst. VIX is still climbing. Russell being resilient right now while tech is selling off. This is very interesting because not anytime, most times you see the Russell stay up or go up, in this case holding sideways, while tech drives lower. That's actually risk on behavior, not risk off. So interesting. Let's see if the sectors say anything differently here. All sectors red. Let's see how they move throughout the day. Consumer discretionary flat. Staples bouncing back. Energy's moving up, so it's like your oil moving to the upside. That can also be a sign for defensive positioning. Finance getting a bounce here. Healthcare flat, all things considered. Normally, like I said earlier, healthcare and finance tend to do better on a Friday. Industrials near the highs. Gap down, but near the highs. Materials flat. Real estate pretty bearish. Tech obviously just looks like the Qs. Utilities coming up. So a lot of selling off, actually, consistent. I'm not really finding the... I guess energy is your diamond in the rough today if you want to be a bull. That's where your strength is. Energy, maybe financials. I'd be careful on financials with that data at 10 though. And industrials, really. Gap down, grinding, trying to push higher here. And you can make an argument for materials too. So there is an attempt at a reversal on the market right now. Back tested this LOI here, so we'll see if bulls can push back over it. Volume still pretty good. We're still over 100K, 200K. VVIX still moving up. VIX still moving up. Apple is not getting over this level. Caution, caution. Microsoft near the low. Google still moving lower. Watch for it to catch a bid down here, 167.72. Amazon really trying to play defense here. And Tesla, not much of anything here. It is looking like a very... we're going to wait till 10, it looks like. That's what it's going to be. SPY trying to push back over that LOI here now at the POC. Remember, point of control, it's that green dotted line here. So this little blue, these blue bars on the side here, this is my volume profile. So as I drag the chart around, it's going to adapt. That shows you volume by price, while normally down here, which you guys see on a lot of your brokers, is just volume by time. So where volume is by time, this is volume by price. In my opinion, you can turn off every single indicator and just use volume by time and volume by price and probably do just as good as anyone else. Volume by time, volume by price, and candle shape is really all you need. But this POC, so this green dotted line, is indicative of where the most volume by price has been traded today. That number specifically is 577.11. Why that's important while we're looking at this block of time here is that tells you where the most buys and sells have happened today. So it's a critical level when you're coming up from underneath to tap it. It's going to act as an area of resistance. And when you're above and coming back down to basically back test it, it's going to act as an area of support. So as you can see here in real time, big candle up, tapped it. So trying to drive the price up, came back into that where it's very liquid, wicked up even higher. So that's a sign of rejection. Came down and closed lower, and now you're back to this LOI, and now you're back underneath it. So you had bulls try to push up. They actually got liquidated, or some people sold. Where the most volume today was where the market was the most liquid and came lower. And that's what you're seeing in real time. So that's why I especially won't get too overzealous on a trade in either which way, depending on where we're sitting based on the volume profile. And actually, look here, you can see down here at whatever this is, 576.40-ish, where this next pretty big blue bar is on the side here, where you're finding a lot of support. So you're really just kind of tapped in a range here with this LOI in the center, which this LOI is based off of day, weekly, and monthly charts. So you're tapped somewhere in the center where you could just bounce around in here for a little bit until more than likely that news event in 8 minutes. IWM still pushing higher. This is your strength today. Your small caps are actually showing strength, which is nice to see. Q's trying to get a reversal in. I think you tap 2309 on VIX and then get a volatility bounce. You could get another attempt here at the 200 MA. If you're a bull, what you don't want to see is a rejection here. Who attended yesterday's live? What are these red bubbles called in the chat? What are these red bubbles called here? What happens if one of those red bubbles break? Just looking at the one indicator. Who paid attention yesterday? What are they called? What happens if they break? Anyone? Bueller. I will check the chat momentarily because I know some of you are pulling your phone out of your pocket because you're at work or whatever. Red bubbles. What does that mean? What can it mean if it breaks, I should say? Another rejection here at that POC. I'm guessing Apple got shut down. Kind of. Microsoft new low a day. Google near the lows. Hey, Raydeo123, thank you for subscribing. And if you haven't subscribed and you like what you're watching here on YouTube, do me a quick favor. Click the little subscribe button. If you're watching, you enjoy the content, drop a like, comment, etc. If you're on X, follow me, whatever. Any little interactions, I know all of you are very familiar with the social media algorithm. Do something, please. It helps me out greatly. Thank you very much. I hate asking that kind of stuff. It's very corny, but it does help, unfortunately. Toby is right. It is called a SAR indicator. Thank you, Toby. Very much appreciated. So, if this red bubble breaks, remember what SAR is, stop in reverse. That, just looking at that sole indicator that takes advantage of the parabolic nature of the market, there would be theoretically a potential reversal in place. But until it breaks, you are in a bear trend. Again, just looking at the that one single indicator. 5 minutes until data here. You're building out a big volume shelf in this space here. In this tight little space, we are getting a lot of volume. This 5 minute is not, if data is bad, this 5 minute is not going to support a bull day. It is not. No. Like I said, if we're under that line, I am with 80% certainty bearish. So if we're under 576.70 with 80% certainty, a low a day is going to break. We're going to break pre-market low and more than likely sell off beneath that. Microsoft near the lows again. Google trying to reverse. Amazon losing that level. That's a big, big level for them. Tesla near the lows as well. Yeah, it is iffy. So what you see here as well, you have a high, a lower high, and at the same time, you could argue that you're making higher low, higher low. So again, for those of you that like shapes, I'm not much of a shape guy, but just quick and dirty here, nothing too fancy. I'm not lining that up perfectly. That's the kind of shape you're forming, right? You want to watch the upside break, obviously, if you're a bull. You want to watch the downside break if you're a bear. I don't like shapes because I think they give you false confluence, where you think, oh, it's going to break to the upside. It's a falling wedge or whatever, then it breaks lower. So I personally don't like shapes. I'm more interested in the candles and what they're forming. And seeing these wicks here is indicative of selling pressure. So seeing this wick here at candle 952, this wick here at 954, and this current candle and the one before it, that's indicative of selling pressure. But seeing these wicks conversely underneath all these candles here is indicative of buying pressure. So you're seeing a flux here. You're seeing people establishing positions, selling out of positions. There's a lot of liquidity in this spot right here, right on this key level. And if you don't believe these magic numbers that I say are LOIs, you're seeing it in real time. This 576.70 level is very, very important. Where is most of the volume today? Hold on, let's see. I can actually answer that question specifically. Most of the volume today, so the POC, that 576.50. It's 20 cents off. It's not perfect, but pretty close. And this is a line I've had on the chart now for months. 3 minutes left. If I was a bull today, I would want to be looking at small cap companies. If I wanted to be bullish today. If I want to be a bear today, I would look at your Mag 7. Specifically Apple. Although Apple is trying to break its 200 MA right now, which is fascinating as the market is near, it's under this LOI. Which means someone else is getting hit right now. No, not really. VVIX dropping a little bit. VIX coming down. This is going to line up almost perfectly. If this stays right here and VIX taps 2309 before data and bounces and the market breaks to the downside, that is going to be such a telegraphed move that I'm going to have to put it in the LORV. I didn't trade it, I didn't make any money on it, but hey, sometimes you just kind of sharpen the steel. You prepare, you plan it out anyway, and you go from there. You can go, hey, cool, I was right. And that in itself is worth something. Oh, let's see. 2 more minutes. Yeah, I'm happy I didn't take any trades that open here. I'm so happy. And hopefully if you're watching, you decided the same. Or if you did, you were in and out. Like I said, the opportunity was to get long the market right at the start and get out within like 5 minutes, if that. If bulls can hold this level and push, there will be a reversal. If they sink this, it will break lower. It will break the pre-market low. This is so important here. And we are clearly driven by data at this point with 30 seconds until that home data. And we are sitting on this magical little line that I put on my chart months and months ago. Funny how that works. And notice high or lower high, lower high, lower high, higher low, arguably a higher low. So you're getting into a nice little pennant here. You're going to break hard one way or the other. I don't know which way. I'm not going to pretend like I do. I just told you what will happen depending on where we sit. You're trying to break the red SAR here on the 1 minute, so that would be indicative of a potential bull reversal. There's the break. Let's see. It's waiting on data now. Oh. All right, new home sales beat expectations, so that's good for the market theoretically. Home sale exchanges actually went up. IGTs and beat, so that's good. People are buying homes. So what does that mean? So if people are buying more homes, that's indicative of the market being healthy. People have money to buy new homes, right? So that is a good sign for the market, just looking at that one data point. So let's see what happens here now that we have that information. Yeah, pretty decent beat. New houses sold 743. New houses for sale 504. Not bad. Next release is a month from now. Cool. Not bad. Bulls like that for now. 2309 on the VIX. Exactly. Let's see what happens basically right here. If you're a bull, so your confluence you're going to look for here, breaking the 200 MA with volume while the VIX can sink under that, which it's trying to sink under that 2309. That would be bullish. You got your MACD flipping here on higher volume, so that's a good sign as well. I wouldn't get overzealous just yet, though. You got to get over this 200 MA. Otherwise, you're going to get faked out here with a strong probability. So if there's follow through, it's a good move. If there's no follow through in the next minute or two, it's going down. So hang tight. VVIX is also going down. Apple kind of sitting there. Microsoft basically at open. Google trying to push back up. Amazon flat. Tesla pretty flat as well. What's our volume looking like? Volume starting to taper. You're seeing the volume decline down here a little bit. Obviously you have the news here, so you had a bump. So you want to see what volume looks like in the next like 3 to 5 minutes as well. 3 wicks like this is not a good sign if you're a bull. That's indicative of selling pressure. People are selling. They don't want to buy up here. They're getting rid of their position. They're liquidating, whatever. So anytime you see, especially like 3 tails in a row, 3 wicks like that in a row, not a great sign. Now that could change. This candle's not closed yet, but not a fantastic sign, especially this dark blue line on my chart. That's my 200 MA. So that lines up with not being a great sign. We are going to start Adam's Asset Assault. Adam's Asset Assault in about 1 minute here. I just want to see if we can see what happens here with the market. While we're waiting on that, I'm going to pull up a timer because I like to time these. See if I can get them all fired off here in under 20 minutes. That's always the goal. 10 names for you guys. If you don't know what Adam's Asset Assault is, 10 names for you guys. Full analysis in under 20 minutes. That's the goal. So 2 minutes on average, depending on the stock. Trying to give you as much information as quickly as possible with names you may like to consider for your own trading. All right. I guess we'll just come back to SPY. I'll do my Adam's Asset Assault and we'll pop back and see what happened. We'll see if we'll do some post-mortem. See if the 200 breaks. We'll see how volatility behaved. And then we'll go into options operation. So let's check out the list. Oh, SPY's trying to break now. Come on, I'm trying to do a show here, SPY. What are you doing? Either break or don't break. What are we doing? Gonna break? Yeah? Maybe? Maybe? No? All right, I don't care. All right, 10 names for you guys. Today on the docket, we've got American Airlines, Under Armour, Equinor, Cabot, Run, Microalgo, AUPH, which is Aurinia Pharmaceuticals, Apple, Joby, and UPS. So we're going to start down the list, work our way up. The timer is about to be ready to roll. And here we go. All right, UPS. You guys obviously know UPS, delivery service, biggest and one of the only few in the world. Very interesting setup here if you're someone who likes risk with arguably a stable company that's not really going anywhere. What I like most about this chart is the monthly. Look at your monthly here and look at where the 200 MA is. All the way down here, you hear me talk about the 200 MA all the time, but it's a great, simple indicator. And then you combine that with your other tools. It's a fantastic tool to use on longer time frames specifically. That number on the 200 MA right now is 88.91. You're currently trading 95.88. So even if you want to risk, and this is a bull side trade that I'm talking about here, risk that 200 MA as a stop, you're only risking about a $6 drawdown for, and I have a decent amount of upside here. Now, to be fair, you are catching a bit of a knife here, and tariffs could impact this name. So just be mindful of, your risk here. Again, with a tight stop, it is actually pretty decent risk. And you can actually see it respected that last monthly candle, respected the 200 MA with volume increasing. So you closed higher on higher volume, which is a great sign for support. If we go back in time as well, just looking at the 200, well, I guess it didn't populate this far back, but it's never tapped it. I'm sure it's tapped it back here somewhere. I'm almost positive, but for some reason it's not populating. But at least going back to 2016, it's never tapped it. So that's fantastic. Looking at the weekly here, again, I'm making no bones about it. You're going to be catching some level of a knife here, but it's good risk to reward here because you're only risking, again, about a $6 to $7 drawdown. Now, that being said, the weekly looks like it could be forming some level of a dirty double bottom here with support obviously coming in around this $91, $95, $92 area. With that being said, you've got your MACD curling up here, and again, decent volume down here, which is a good sign that people could be buying. Looking at your daily chart, you have your POC right here, and we just talked all about the POC basically on today's price. It's right around this $95 area. Got another big block of volume down here at 94 as well. So I would position, and I don't have a position in UPS right now. I probably will establish one later today or next week. But I do like UPS quite a bit for a longer term hold if that's kind of your thing. On equity specifically, price targets I'm looking at 105.19, 107.86, 115.07, and this is my favorite here. You still have an unfilled gap here. Hope that number's wrong. From 116.32 all the way to 129.61. So decent gap there. You're risking, you get about $30 upside here, risking about, like I said, $7 downside. So pretty decent risk to reward, at least looking at like roughly a 3-to-1 risk to reward on UPS. Next name is Joby. This is a name that full transparency, I'm long on right now. And I've been long on, it's treated me very well. This is an aviation company and, drones, that kind of thing. So this one's more going to be a riskier play. It's a smaller company comparatively to what we look at, about 5 billion. So not small, but small enough. Another very nice technical setup here with, again, kind of catching a knife a little bit. You have the 200 MA and a few key support levels right basically where we're sitting today, right in this like 655 area. Looking at the weekly as well, you have your MACD looking like it's going to curl up on the week. You did have a really sharp reversal. Now you're kind of like cooling off your back testing, so it could be a good opportunity to move higher. But what I like most about this chart is the monthly. You've got this downtrend basically from its IPO back in 2021 all the way down, tapped again here in 2023, tapped again here pretty recently in 24, and it's in play. This monthly downtrend, if this does break to the upside, could lead to a sharp move to the upside. Now, you do have a few times where it attempted to break here, but never closed above it. So this is still in play here. So if you're patient, this could be a decent name to consider for a long position here. I'm risking about, I believe I have a stop down here around 601, and I'm going to add more if it comes down to 630. So I'm risking about a 10% drawdown. Looking at the following levels for upside on this name: 712, 769, 782, and an old gap. Oh, no, I'm sorry, this is a new gap. New gap to be filled here, small one at 922 to 933. Past that, stretch targets at 1068. Watch that because that would put you over that monthly level I just alluded to. That's going to be a big level to break clearly, as that could lead to some potential dramatic parabolic upside. Next is Apple. Now, we talked about this yesterday on the program, but I am pretty bearish on Apple here. I do think Apple is looking pretty weak here. On the daily, you're still in a bear trend. According to just looking at our EMAs and MAs, you are grinding lower here pretty consecutively every day. Ever since like tariff drama was announced, Apple's been pushing pretty bearish. Now, your saving grace here and where I would consider a long position is around, again, hey, the magic 200 MA, but it's also in a cluster of support down here. That's going to be all the way down at like 180 to 178. So you still got to lose about 20 bucks here before I consider a long on Apple. If you wanted to take a little bit more of a riskier approach, you could establish a long on this LOI that's actually in play today, this 195.83, and keep a real tight stop on it. That could be a valid reversal point. I just think it's more likely that we get drawn down even more with everything going on and how Apple is, in the news lately. On the monthly as well, getting back down to here would allow it to cool off. So when I say back down to here, that 180 area, would allow it to cool off from the highs quite a bit. At that point, you're going to be $80 or $70 off the highs. It would give you a decent opportunity. And you have a decent block of consolidation price action there as well. So being in that area, also where the 50 MA is on the monthly, could lead to a decent bounce point. So I would consider a short position on Apple, maybe not right now this second, but a short position on Apple sub 195.83 all the way down to that 180 area. However, in that 180 area, it would be a decent long. So depending on what your strategy is, even if you don't want to short, you could at least keep that 180 area on watch for potential long with very limited downside, if that's more of your thing. Next is AUPH, Arenia Pharmaceutical, whatever this, oh, it is pharmaceuticals. Okay, it's abbreviated up here, so I didn't know if it was different. Anyway, Biopharm Company. I'll be straight up with you guys. This is a name that's popular right now online in a few circles. This is not a name I know anything about their pipeline. If you're investing in biopharmaceutical companies or any of these kind of companies that have some sort of pipeline, you must do your research and be well aware of their pipeline. Now, with that being said, with that little disclaimer out of the way, it doesn't look like a bad setup. You had a drive up here, rejection of the 200 MA, came down, and now you're kind of consolidating here around this like $8 price, which is actually pretty solid. Even on the monthly chart, this is an actually decent point of support here. If for whatever reason they have good news, a drug approval, whatever, which as you can see, this is what price action does when you get some sort of phase approval or drug approval, you should see a decent pop on this name. Now again, I don't know anything about their pipeline, and you have to keep in mind these names are hypersensitive to that kind of information. So if a drug is approved, denied, etc., it will strongly affect a name like AUPH. But I wouldn't necessarily be short on this name from a technical perspective. There's a good amount of support here, even if you look down to the downside, basically 707. So if you wanted to get long this kind of name, you could do a decent position here with a stop around 707. Now be mindful, again, if there is some sort of negative news that comes out after hours, it could blow right through your stop and go all the way down like $3 or something dramatic, and you won't obviously be able to get stopped out at a reasonable time. So be aware of the risk associated with that name. But from a technical standpoint, staying north of 707 should be a decently bullish trade for you if that is something you're more interested in. 8 minutes in so far. We got 6 left. Let's keep it going. Next is Microalgo, MLGO. This is a name that I stumbled upon that is getting a little bit of hype here. It's a smaller company right now, about 153 million in market cap. So be mindful of that risk when you're dealing with a smaller cap company. But the daily chart's actually looking like it's putting in a reversal now. They got approved for $80 million convertible notes. That's going to give this company some money. They operate in algorithm. What is this? Sorry, I prefaced myself on this last night. Algorithm services and chip services. So if that's kind of your thing, you like AI, whatever, maybe take a deeper look into this company. But again, from a technical perspective, not that bad. Coming off a decent catalyst, because a lot of these companies will struggle. Like, they can be as forward-looking as they want, but as we talk about on this program quite a bit, if it's hard to borrow money, companies like this get strangled. And you can see by the price action, it's been strangled. And now it's at a point where it could bounce and get a little bit of a squeeze here. Now, to be fair, it is coming off of a decent bump here in price action. If we're zooming in on the 5-minute here, where just 2 days ago it was $1.12. So it's up over about 100% here. So be mindful of that as well. But with that being said, it isn't looking like a horrible... Why is this all wonky? That's weird. That was weird. All right, it's not looking like a horrible trade if you're looking to trade a name that's adjacent to this sector. If we zoom in here, it's got a decent amount of support at 163. So with a name like this, you're going to have to allow it a little bit more rope. So at least take that into consideration because it is a smaller cap name. So 163 could be a decent support area. Whether you look for a long there or whether you look for a stop there is up to you, obviously. But getting this much volume here, this much of a reversal here, and getting through this area around this like 250, this 248, could lead to some decent upside here at 348, 390, 460, and then some stretch targets here up at 642. Could get us some momentum, could be some level of a squeeze here on the daily chart. Take a deeper look into short interest and what this company is about before you consider investing in MLGO. Next is Run. This is a name that I've traded many times. I do not have a position in it, but I may take a position in Run soon. Got hammered. It dropped 40%, 50% yesterday, and I've been watching it ever since. So this operates in the solar industry. And solar and Trump don't seem to get along too well. When that happens, you get this. It's basically been sitting, and it likes this like $6 area, but if you zoom out here, at least recently, that recent 52-week low is right at 545. So you're about $7 here. It's a decent risk to reward, in my opinion, especially with support at this 627 level. The all-time low on this stock is 415, so even if the worst thing happened and that 545 broke, I mean, it is, to be fair, about like a 50% drawdown, which is quite a big drawdown, but the risk to reward here is pretty solid. If you get back to where it was a week ago, you're up 100%. So take into account how much you want to risk with that kind of trade. If it can find some footing here, and I'm not saying rush in right away by any means, but you got a decent gap here, you got another gap up here. This one could perform pretty well. I think it may need a day or two to kind of find its footing here, unless it just flies out of the gate. But I like this one quite a bit, so at least keep it on your radar. Important levels or price targets to watch here: 843, 934, 997, 1099, and 1233. Moving on is CBT Cabot. They operate in chemicals and materials, so if you like that kind of thing, check this out. If you want a little diversity into your portfolio, full transparency, I am long this name. I'm basically flat on this name right now. I do like it quite a bit. Another one that's sitting on the 200 MA on the weekly. It's got a lot of support here as well. On the monthly, you got your 50 MA here as well. So you're sitting on two key levels on the weekly and the monthly. So longer term price action is supporting this. These are the kind of knives, if I'm catching knives, this is the knife I catch. I catch the knife that has come down and taps these key supports with a managed stop. In this case, my managed stop on this trade is 69.09. So I'm allowing about a $5 drawdown. Now, with that being said, what I'm looking for upside here, bare minimum, where I'm like looking to take profits, around this 86.07 level. Other areas to watch as you move higher: 78.01, 842, 86.07. Then you have 88.99, 92.42, and 137. With that being said, if you were to enter roughly around today, that gives you about a 2 to 1, 2.5 to 1 risk to return ratio on that, moving up to that 86.07. So you're risking in that case about 6% drawdown for 16% upside. So pretty decent risk to reward name that you may want to consider to offer a little bit of diversity. I know a lot of people don't really invest in like chemicals. It's kind of a boring, like this will be a boring stock. It's going to be a snail. It's not going to be very fun. Actually, if you look on the 1 minute, this is what the candles look like. It's not an exciting name. But if you're patient, it's a good place to park some money and just set alerts and move on with your day. In the same sort of realm is EQNR. Again, another name that, full transparency, I've been long on since around 2243, and I still believe there is a lot of upside on this name here. They recently spun off part of their business, so that's going to give them a little bit more upside. Currently hugging around this 0.382 fib level here. You do have 1 and 2 gaps to fill to the upside, so it does look pretty good if it can get some bullishness. Watch that 2420 area and 2427 as a key driver of getting that momentum to the upside to fill this first gap and then fill the second gap. So this is a name I like quite a bit. Decent risk reward, maybe not here just because I'm already up on this trade about $1 or so, but I wanted to highlight it for you guys, something you want to consider. If it does come back and back test 2327 or 2303, those are key areas of support, or they're now support, I should say, where you could consider an entry if you do like this name. Second to last name is Under Armour here, UA. This is going to be more of a long haul. This is a company that is probably going to get affected by tariffs as well, so you want to be mindful of that. But I think this is just a feeling. This company's going to do pretty well. Full transparency, I've been long on this name for quite some time now, and I've just been kind of accumulating, similar to what I did with MVTS, and you saw that worked out yesterday. I think you're going to see a few potential possibilities with Under Armour. Now, I do think it reversing off of this low here, sitting around the $6 area is comfortable. I wouldn't get too excited as someone in a new position going north of 7. Now, this is more of like a fundamental trade for me, so I'm not too worried about the technicals. I like the stock. I like the company. It's a little bit different. But with this evaluation, it's a dollar evaluation. Is it insane? And if you're in the seed to tree program over exclusive trading that we have, which is like a small account program, I call out these companies that I think are potential buyout candidates. They have brand recognition. They make money. People like them, whatever it may be. Is it insane that someone may want to buy Under Armour? Under Armour is valuated right now, so at current market cap, at around $3 billion. So even if we said they bought it at double the valuation, which wouldn't happen, or could happen, who knows? But they buy it for $5 billion, that put it at $12 stock price, right? And so on and so forth. Is it crazy that someone would pay $5 billion or $10 billion for Under Armour? I don't know. It's a great brand. It's been around for a while. Their books aren't atrocious. And when you see other companies kind of flailing in the wind, like Nike, which they're trying to, build back a little bit, a company like Under Armour, I think, could make a decent stand. You also see other companies like On doing really well as well. So these are these specific brands that could be hot topics where there should be some consolidation in the space where we're seeing a lot of these hotter brands, Lululemon, whatever. It wouldn't shock me if the bigger fish start eating the smaller fish. And in my opinion, it's not a tiny fish. It's $2.5 billion, but it is a smaller fish for all things to be considered. Lastly is American Airlines, currently sitting at 11.18. Interesting name. I'm not long this name right now. It is something I'm watching. Depending on how the next few months work out, and as you can see, this one got hammered when the actually pre-tariffs, and then the tariff stuff just made things worse. But it's around the $10 to $11 area, like historically, if you're looking at it. I mean, look at this like big chop zone essentially here. North of 11.15, south of like $13. It just kind of like hugs out in here. Eventually, it tends to get some bullishness above that, but it is an area that it's pretty comfy in. Now, back here, it got pretty dirt cheap back in 2008, but that's a different story, obviously, from 2008 to 2013. Times were hard, but when times are good, it flies up. So if this is a name that you want to consider to be long on, I do think there's an opportunity where you could get a decent return on your investment if you're more looking to like dollar cost average into a trade. And this would be more of a very long equity trade that I would watch. North of 909, I like it. Even north of 825, I like it. Those are pretty key supports here. You're trading at 1119, so you would be buying on a premium. With that being said, if it does break below this 1115 with some volume, it more than likely is going to get into this 973 to 909 area, which could be a very good buying point. So not that I want to be short American Airlines, but I want to be patiently waiting to potentially go long in this area and just kind of wait it out. That is Adam's Asset Assault. That was 18 minutes and 7 seconds of stocks coming directly at your face with everything that you need to know in regards to what you should watch for those individual names. Let's check on SPY. What we missed, not much. Great. I really got to go to the bathroom, so I'm going to play you some music, I guess, and I'll be back in like a minute. I drank way too much caffeine this morning in anticipation of the show, and I'll be back. Let me find a song for you guys to play so you're not bored out of your mind and you don't leave me. But while I'm gone, if you want to drop anything in the chat for any sort of stocks or anything like that, like I said, I'm pretty open to checking those out. Or we do have options operation next, so hang around for that. If you do have any questions in regard to a specific trade without giving me too many specifics, that's the point of options operation. We'll go through that together. I can give you a little hand or a little not advice on what you may want to consider as it pertains to your trading in general. So hang on for a little bit. I will be right back. I'm just trying to find some music for you guys to play, and be right back. Man, who let Through the Fire and Flames in? Wow. Maybe I should have played that in the background of when I was doing my last segment. That was a little too much hype. I'm sorry I left you guys with that much hype. That was a little bit too much energy, I think. All right, looking at the market here, we got a little bit of a push up, but not much follow through. Did volatility come back down? So volatility did break that 2309. Now, like I said, we'll do a quick post-mortem on the market before we get into our next segment here. Keep an eye on 578.17. Let's check our volume. Volume's actually still pretty steady. I'm actually kind of surprised, to be honest with you. It's obviously dropping, which is normal. It drops as the day goes on. Ooh. I might take a short. I'll do a 1 or a 4 DT though. How about a trade? You guys like that? Would that be fun? Yes, no, maybe so. How about a trade? IV's low too. Yeah, I'm looking at the 575 puts for 25th. You guys said you'd like that last time, so maybe instead of options operation, we'll do a trade. All right, I'm in on the 575 puts for the 25th at 243. That is 4 days out. So that's on the, I'm sorry, the 27th. I was reading the year on accident. And now they're already at 255. 257. I'll keep the chain up for now so you guys can see. 260. All right, gonna trim a few here. All right, gonna trim again. I'll get you a number in a second. Not too bad, right? That's 10%. Nice and quick. That's fun. Let's do it like this so I can see both for you guys. How about a spread? I wouldn't do a spread today when I'm anticipating volume to be low. So remember, when you do a spread, you got to get in and out of the position, and you got to fill 2 legs at the same time. Very challenging if you're anticipating lower volume. So be mindful of that. You can do a spread, obviously, but I would not take a spread today. Just because you're going to have a hard time getting filled. Remember, for every time you're buying, for every time you're selling, someone's got to buy, right? So if no one's there to buy, well, again, 2 legs is different than 1 leg. All right, I'm gonna trim again. We're near this 200. I'm sorry, the 50 MA here. That's 13%. And then what we can do here to be safe, because apparently I've had bad luck trading SPY on stream, like I talked about yesterday, I will slap a stop loss on. If you hear me typing, I'm putting this in our Discord over at Exclusive Trading. If you want to check that out, you can catch all of our trades, education, the whole kit and caboodle. More information on that on all of my socials. So we'll keep an eye on this now. Like I said, the biggest opportunity I think is going to be to the bear side. This 5-minute, why I took that short, your MACD's starting to get a little exhausted here on the 5-minute. You've got the 50 MA coming down, and you've got 1, 2, 3 wicks here to the upside, indicative of potential selling near the highs, which tells me to be even more risk off. But because I know how the market's sitting today, if there is a sell-off, this would be the time for it to happen, more or less. And if not, I can get stopped out and see what happens if we push to the upside. So getting in at that point in time and then coming back, like getting in when I got in, specifically, like we kind of saw yesterday with Tesla, where I lagged the entry because I was hesitant. Getting in specifically where I got in there offered me this drawdown, right? Which is great. I made money. But the bigger fish here is what I'm trying to catch. So we'll see if that comes to fruition or if I end up getting stopped. So we will find out. Do you use Webull to trade just as well as just charting? I use multiple platforms. I like Webull's charting, honestly. I tried TradingView. I do have it. I just don't love it. But Webull's actually, like, it's come a long way. I've been with them for a while now, and they've really beefed up their what they offer in terms of like indicators and technical things in general. What I also like about them is they give you all the data. So you might see if you open up on TradingView and you don't subscribe to certain data feeds, if you pull it up side by side with Webull or E-Trade, someone else, you may not see volume at certain points in time. Webull gives you all of that. So I get all the volume from all, I think it's all the exchanges. It might be like one or two that I don't have, but I get most of the volume from a lot of the exchanges, whereas other brokers aren't giving me that data. So someone who uses volume to trade I don't know, not very closely, very importantly, it's very important to how I make my money. If I don't have all that data, I could be missing out on important information. There could be a big buy on a certain exchange that I don't know about because it didn't show up on my feed because I don't pay for that TradingView package or whatever, and that's not worth it. Now, I obviously could just pay for the TradingView package, but why? So that's that. All right, it's looking like I'm going to get stopped here, which is A-okay. Got pretty close. Pretty close. Will we get stopped? We will see. More than likely. Or not. Or not. May not get stopped. You're making, if we reject lower here, like right now, that's going to be your third lower high here, which as a short is something I want to keep an eye on. So good risk to reward here with that stop on. The entry was solid. The stop here is very important though, because there is a strong chance that if it does break to the upside here, it will push pretty hard. So you don't want to be, don't have too much risk here. Volume is now starting to drift a little bit. So you're seeing volume start to decline here, at least in the last 4 minutes. It's 10:30, so that makes sense that volume is starting to come off. So you're going to want to keep an eye on that as you proceed through the day. It more than likely is going to continue to drift if I'm a betting man, like I alluded to earlier this morning. All right, that was my stop getting hit, so I'm all out. Nothing fantastical there, but hey, green is green. I put a market stop on accident, so that sucks, but hey, it's fine. It's okay. How about you want to look for one more? Maybe one more trade. Maybe. If the bulls can't push it here, I might just reopen the same short. They're trying. That was a good stop. Really trying. So with times like this, even if I'm like more than likely short on the day, I like using a stop there because if it does break, like I knew we were going to get a hard push or relatively hard push, I can always reestablish a short right here and I'm saving $20 a contract. So if I want to get back in, which I'm debating, I could get back in at a lower cost basis. You're hugging the highs here. This would be really like a triple top. Let's see. All right, I'm looking at the same contract again. It's iffy. All right, I'm dipping my toes in, so I'm getting a few. Grabbing a few more. All right. At size now at 225. So basically you can risk the high here. Let's see where it goes from there. Now this is more of a bull trend, to be honest with you, but I'm risking basically a triple top here. So that's what I'm looking at here near term, is a triple top and this old high as well. So this 578.16. There we go. Ready to trim. This is why I'm really good at shorting. All right, trimming here. 8%. Got nothing fantastical yet. Bulls brought that right back up. You're going to want to see the follow through right now. You're going to have your green star creeping up. So again, this is a bull trend, but if the bears fire it down, there should be some momentum at least to bring it back to here. This 577.20, your POC down here. Past that, you could slap a stop on and just see where it goes, kind of thing. Because if we do break, again, if we break this line, this 576.70, I am with an 80% confidence that we are going to break low a day and more than likely break pre-market low. So I would rather be positioned bearish on the day than bullish, because that's where the risk to reward is, at least at these levels, right? Here's your second chance if you missed your trim. I'm going to probably take another one off here. We're getting near that SAR, so there should be some bull stepping in here. All right, trim again for 11%. Not too shabby on a 4 DTE, honestly. That's pretty good. Not bad for a few minutes either. Watch the green SAR break here. Again, I'm looking for this POC where I want to kind of like go, not runner size, but at least put a pretty hard stop on it. But you're probably going to sweep down to this 577.45. That's what I would be more interested in seeing an interaction with there. If you're in a smaller account, maybe you consider a stop loss at break even just to be safe. In fact, let me lead by example. I'll put a stop loss. How's that sound? Stop loss at break even. There. We'll just do it to be safe. Could be a wacky Friday, who knows? There you go. No one crying now, right? Great. I have to bring up the live on stream trading results because that was not... I've had bad luck trading SPY on stream, so I'll take the 2 W's and be happy with it. Nice rejection here by the bears. Watch the SAR break, so that green bubble there. We should get back down to here if it does break, which is at least a... It's roughly $1. So our delta is 35. So a delta 35 at 235. What does that bring us? 270? Yeah, roughly 270 or about a 20% gain. So if we tap that price target down here, should be sitting at about $2.70-ish a contract. Just on current delta with no delta appreciation, which is pretty solid. Stops are in right now, so if it does break the high, no harm, no foul. Best kinds of trades. Volume is getting not great. Had a little bump there on that bear candle, but that's near the high of the day. I'm sorry, on that doji candle. We're getting near the 100K mark now. Let's check our 5-minute volume. Yeah, so here, look at, this is another thing that I look for and why I reopened a bear position here. Look at the volume here on your 5-minute. And what do you notice down here? That one big green candle, that reversal to the upside, it's on half as much volume as the previous candle. So that is not indicative of strength at all. In fact, the following candle is on heavier volume and closed lower. So there is better odds of a bear move here than a bull move. And I might get stopped out before it, but there's a better chance of bears making some money here than bulls. And I got stopped. That's okay. Now we wait again. Now you got to also remember these contracts are going to start to depreciate. Let's check our IV. Did it go down? Our IV was about 16% when I got in originally, so now it's 15.21. So it has been dropping. So that is a sign that IV, as IV comes down, those price of those contracts come down as well. I could have got wicked out here. We'll see. I'm not rushing. I like the 5 minute for a bear play here. So this next one I might not even put a stop on it. The bulls have to push hard here if they're going to push to the upside. If they do not push hard here, then this is going to come down. With a high degree of certainty once again. I have 2 high degrees of certainty. Bears got to push, or bulls got to push here like right now. And if we break under this line, you're sweeping low a day and you're also sweeping pre-market low. That's why I want a bear position. So I'm going to be looking for a third entry here on the same contracts. And this is why you also don't want to bag hold contracts, because you can get a better opportunity. And if it's worse, then you don't have to take the trade. So no harm, no foul. Contracts are sitting around 230 right now. We're near the high a day. You got a decent wick here. I'm just going to bite the bullet and wait on this. All right. I'm long at 229. Or long the puts. Man. My timing is impeccable. All right, taking a trim off here. 6%. Again, nothing crazy. I'm trimming more aggressively than I normally do just because, again, we had this whole discussion about risk at the beginning of the show. That is why. So now your POC, at least in this box, so let's look at this time of data. So we're going to only look at basically where we trade at the highs. Your POC is right here at 578.06, so you can use that as what I like to call a trigger. When you break the trigger, when you tap the trigger, you tend to see volume come in to support it. So in this case, we're coming down to backtest it. You're going to see support there. But when you break the trigger, there tends to be more of a steeper follow through on a trigger break, which you could see that trigger break here momentarily. You're looking bearish on the 1 minute. You're looking like you need to be bearish on the 5 minute. You're 3 minutes bearish. You're 2 minutes bearish. This should come down. So I will be more patient on this one. I'll cut the rest if the highs break for whatever reason. But that's a decent candle. Let me pull that up, make sure. Cool. All right. Back near the highs again. And one thing you want to make sure of, again, while you're sitting here, is that your IV doesn't deplete too much. So right now it's at 15.19. So you don't want that to go much lower. It was at like 15.18 a few minutes ago when we talked about it. So we don't want to see this drop to like 14.50, because that way we're losing value just sitting here waiting on IV, because volatility is sinking because we're not going anywhere. Now, as it moves up, so if we break to the downside, we move faster, you're actually going to make extra money because IV will increase on that move as well. So be mindful of that. You could get free money on a harder move to the downside. If this doesn't come to fruition in about like by 11, then I'll close it out. But we should push lower. Should. Any questions thus far, guys in the chat? If you're liking if you enjoy the stream so far and you're liking whatever, if you haven't already, please drop a like, a retweet, a share, a comment, subscribe wherever you are. I appreciate it very much. I try to keep it to only 2 a stream, so I don't bombard you, because I hate when I'm watching a video and I'm like, don't forget to like, share, and subscribe. But it actually does help quite a bit. I can see my numbers actually change when you guys interact, so I do appreciate the few seconds it will take you just to hit like and whatever. It does help me quite a bit, so thank you very much. We are sitting near cost again. We are sitting at the highs. It's like watching paint dry. It's not a fun day to trade. Wow, run is already moving. We had that in Adam's Asset Assault. Run is up 10%. Big push here. Watch it tap the 50 and come back down. I think it needs to find a base down here before going long or short. Or I prefer a long down here. This is obviously some level of a mean reversion. If you got in yesterday, you made good money on that pretty quick. Oh, SPY. All right, now volume is actually definitively tapering. We're now starting to tap into under 100. Now, with that being said, we are near the highs. You're seeing a lot of wicks, so there may just not be any bull strength. There's no buyers at this price, so volume could taper because of that as well. And time of day. It's 11. It's almost 11 o'clock. Less people are participants in the market at this time of day. This just feels like it's going to go up, putt around up here, and kind of one of those, unless we have Trump at 1 o'clock, right? I believe. Yeah, Trump at 1 o'clock. He could say something that would push it either which way. Not going to pretend like I would know, but that tends to be the case. Until then, we will wait and see what happens here. I feel like I should put on music or something. I just don't have much to talk. We're not moving, so I can't really give you guys much else to say. I don't have any other analysis here. Just not much to say. We could look at Tesla. We'll look at some other names while I'll keep this up here. We'll keep an eye on it. Really kind of flat day. Like, oh, Tesla pushing. That's going to push the market. Again, I'm going to risk the highs. The high breaks, I'm going to close. Well, it stays broken, I should say, because now we're tapping the highs. And we're wicking the highs. A double top would be pretty sick, actually. If this closes lower, that's going to be crazy. Okay, we rushed the highs. We're leaving a sizable wick. Tesla got a big move on that, but it's also leaving a wick. That's a crazy candle. Some excitement. See, okay. Now I can show you guys something. That's why I always wait. So that kind of movement, like I said, I'll close it out if it breaks the highs. That's the kind of final like liquidity sweep kind of move I'm looking for, where they're like, all right, we're going to pump it up and we're going to get all these stop loss orders and then we're going to sell it off. That's the kind of final thing I look for. So if that sticks and if we don't sustain over the high, then that makes me feel even better about a downside move here, because now we're leaving a crazy wick, which is, again, indicative of selling pressure. We're back near cost again. Bulls are coming up again. Tesla's still pumping. I wonder if Tesla got some news. I'll check that out in a second. Apple getting a little bit of a bump here. Nothing too crazy. It's just been really sideways today. Amazon got a bump a little earlier, but kind of flagging a little bit of a move. So your Mag 7 are getting a little bit of love here. A little bit. Let's see. Microsoft. Check our 5 minutes here. Tesla's not looking awful. Tesla might put the market on its back today. If it can break through here and get over this LOI, it might try to put the market on its back. 339.20. Watch that level. Amazon does not look bullish. Google does not look bullish. Microsoft does not look bullish. This may be a slow burn. I'm happy I took a 4 GTE. This may be a slow burner. Well, got 6% gain on there. I don't want to sit here and watch paint dry with you guys. I'm sorry. I like to, when I'm doing this show, I like to talk and entertain you, keep things upbeat, uplifting, but I don't want to sit here and watch candles paint dry, and I'm sure you don't want to listen to me watch candles paint dry. So we'll leave it open for 1 or 2 more minutes. If you guys have any questions, you want to drop them in the chat, or any requests, feel free to do so. And before I take off, I'll be more than happy to read those. As a reminder, the market is closed on Monday, so be conscientious of that with not only your trading, but don't show up here on Monday. Next week, we'll be doing a few more shows, and thank you. The market's moving now. I just had to say I was going to leave, and then it's like, oh, don't leave. Watch. All right, I'm going to trim again here. Oh, I feel vindicated. That's so annoying. All right, paid for my time. I took 12% there. All right, now what I'm going to do is put a stop loss on and go have lunch. How's that sound? Good? You guys can ride that out. Here, I'll give you the game plan, right? Here's the game plan. Next area that I would be trimming is right around here. So where this POC is, this 577.09, which maybe if I start talking again, the market will just go there. So 577.09. Next area I'd look for a potential trim is this 576.70. If we break under this 576.70 and VIX is north of 2309, then low a day will get tapped, and low a day more than likely will break, and then pre-market low will more than likely break. So if you're short side on a 575 getting down to 573.28, that's $4, which is also for $1.20 a contract, get you about a 50% gain if we hit pre-market low. So not bad. Not bad for what could be a slow, grindy day. So you might want to hang on to those with a stop loss. You do whatever you like, but definitely don't be greedy. The taking profit right now at about 12% is awesome. Another point right around here, you should be at around 20-ish%, right around this 577 area. And you should be around like 25-30% around this 576.70. Under that, you're going to start heading into the money. And you should go into the money if we do break that low there. So be mindful of that. I might take one more trim before I go, just so I can say I did it on live and I don't suck as much when I do a live stream. All right, trimmed a little bit more there. There you go, 17%. Not too shabby. All right, guys, that's going to wrap it up for me. Hope you enjoyed the stream. I hope you learned something. Hope you enjoyed everything that we have to offer you. And by we, I mean me, on the Atomcash angle. And some say you need an edge to trade. Well, I like to look at things from a different angle. And that's what you will always get here on the Atomcash angle. Have a great rest of your day. And remember, precision beats prediction every damn time. And before I let you go, here is our brand new outro music. So enjoy that and hang around for it's like 50 more seconds. And then you can also maybe trim another one when we hit the next price target if you hang around. The music's good luck, actually. So when you stick around, you'll more than likely get that price target and get an exit around like 280. Cool. Hang around. See you later. Bye.
The time has passed, and that's a wrap.